Hello and welcome to today's morning report. Charter Process with me, Richard Pare, analyst at Handset Markets on Monday, 17th of July. We've got a fairly mixed outlook, really. We had that sharply strong move against the dollar on Friday, which affected across the markets really after the inflation data came out so disappointingly, and also retail sales was for the States was weaker than expected as well. But you've got a slight dollar rebound today, pulling the euro lower, sterling lower, and pretty much across the board. You've got these forex majors which are all sort of pulling a little bit of dollar strength, but nothing too significant. Nothing really to sort of change the direction. Here we see the dollar index, which again had that sharp move to the downside. Basically, just unwound some of that move, but not an enormous amount. And yeah, I think you sort of look at the sort of choppy moves on Treasury yields. Really, I mean the Treasury yields had opened up more positively this morning, but again back lower. Some really sort of choppy moves that we've actually seen in the last week or so on these Treasury yields, and it is interesting that we're basically seeing this as sort of the dollar has rebounded slightly, but I don't necessarily think that that rebound is going to last especially long, because I think the markets are sort of going to look at this US data that continues to disappoint on the inflation side, and I think continue to sort of come out the dollar on the back of that, because I think of the effect that it's going to have on the Fed monetary policy potentially. And that is the big word, potentially. But in terms of equity markets, is again interesting. We had look at S&P of 100, absolutely smashed it to the upside, all-time high again on Friday. We saw Asian markets which were positive overnight, although the Nikkei was shut for public holiday. You saw broad Asian market gains, but the European markets, DAX was up earlier on. It's now down sort of 50 ticks. CAC was also up. FTSE was up stronger than that. So it's sort of these markets have lost their initial upside impetus, and my chart today is the DAX, so I'll be looking through that. But yeah, some interesting moves. You've seen also gold, which broke strongly higher the end of last week. It's just sort of pairing those gains, just consolidating slightly. Oil as well, sort of trading around the flat line on oil. Nothing really doing in terms of the commodity moves today. So, what have we got to look forward to today? Not a great deal. In fact, the US data this week is pretty thin on the ground, and not a huge amount. Although overnight you've had this Chinese growth and industrial production, retail sales data all across the board positive, beating expectations on that, and really strong numbers with regard to retail sales and industrial output. So it's risk positive, this data. So initially the markets were positive, but it just seemed to have sort of leaked away as the session has developed. Not a huge amount of data other than that. You've got this New York Fed manufacturing at 1:30, expected to come in at, again, a positive 15, which is a pretty decent number actually. And then later on, Kiwi inflation at 1.9%. So not a huge amount to move markets today. But my chart today is the DAX, and I'll show you this basically because we've had this sharp upside move the early part of last week, and the market's just since then consolidated, but started to drift off. And it's interesting that this is coming as the market sort of now arguably even completed a little top pattern, you could say, on a move below this reaction low that we had on Friday, which was 577. So moving below that, the market has sort of completed a small little top pattern. You could see it pulling back to 490. Projection of that top pattern brings you back towards that neckline, 12490. That is your key level. That is your old neckline of this 2-month top pattern, which had been resistance. Broke through that resistance last week, but a retreat back towards that market. Be very interested. It would be very interesting to see what the market does around that what is now a pivot. So 490 being the pivot, and especially if the sort of momentum indicators do sort of continue to do this rolling over, MACD lines rolling over underneath neutral, RSI back below 50. Stochastics losing their impetus as well, around about the same point at which they did in June on the Stochastics. So, yeah, I mean, it sort of begins to bring into question whether this rally can continue. I mean, it didn't sort of break above that resistance at 12,730 area of that reaction high, and that was the latest lower high, and the resistance comes in at 12,676 now. So is that the limit of it? I think the reaction around 12,490, that old pivot, could be key to this chart. Momentum indicators on the hourly chart reflecting this sort of deterioration rolling over that we've seen, but again 12,490 is key. So with that in mind, I wish you good luck in your training today, and I'll speak to you later. Thank you.